Good evening, good evening, good evening, everybody. I'm eating some little cheese and crackers, something. I ain't ate no dinner yet. I'm sorry, y'all. I'm hungry. What's up, man? Y'all pull up in here. What's up here, learning show? Sorry for crunching on y'all. For anybody who ain't True Blue Gang, you probably hit the door already. I appreciate that. New year, new me. Y'all know who it is. It's your boy, Aranya Grande, a.k.a. Big Spider. Yeah, man. You see my new background, Chris? Right there. Hola, que pasa, Valdez? What's going on? Oh, you got the new
Aranya Grande, yes, sir.
Aranya Grande. Appreciate it. All right, man. Enough shucking and jiving. Let's get to it, man. A jolly pies to y'all out here on Al Gore's internet. I've been MIA for a little while, but me and the gang been going crazy in the Discord. You hear me? We've been going crazy. I ain't been like really doing no live streams because I've been busy. But me and the gang been going crazy. Without further ado, what's up, E-Rock? Without further ado, let's get to it. Let me open up my my computer need to install something. It need to install something. I got a little bubble. I got a little bubble there. Let me open up my trading view and get to it, man. Open up a trading view and get to it, man. It's the first of the month. Wake up, wake up, wake. It's first of the month, man. First of the month. Big Spot. I was about to sleep, man. Now I can't. I must watch for the knowledge. The smile and the good vibe. Hey, man, go ahead and go to sleep, man. We just gonna look at some candles, some green with some red ones. It'll be the video will be here tomorrow, man. Go ahead and get your sleeping, your slumber. Ain't no need to stay up on our account. Ain't no need to stay up on our account. This is the Nas Dizzy chart. Let's go over here to the old ES, because that's what we usually chart on here. So we're going to chart the E. What in the afternoon is going on? Look, what happened? What happened at 4 o'clock? Who did what? Who shot JR and got away with it? Somebody tell me what happened at the foot. Look at this. This is the 4 o'clock close right here. This is the last candle. Wait a minute. This is the last candle. Y'all probably can't see that. Let me turn my fancy dancy on. That candle right there, that's the last candle of the New York trading session. And then look at the price from 4 o'clock until 5 o'clock. Look at this, from 4 to 5. What in the world? Facebook went crazy. Okay, Facebook had some good earnings or something. Man, look at this right here. Went insane. All right, we ain't here just to focus on what happened today. We are here. It's the first of the month. Get up, get up, get up. So let's do our monthly chart prep. Look at the monthly count on ES. We've come up and taken out the high on the E of the we've taken out the January high already on the ES. January high has been taken. Let's look at the 3 C stars. The 3 C stars. Where's my? I used to have them up there. I guess they're not there anymore. So let's look at the 3 sisters. That's the ES. Let's look at the NQ. And let's look at the YM. I'm going to the continuous charts so that we can. Oh, you know what? When I compare it, the continuous charts don't be looking right. They don't have the B adjust turned on the compare. So let's do this right here. Let's go. NQ. That is you. NQ. That is you. And then we'll go here and go YM. YM. Why is that defaulting to the dollar? Dollar. YM. 1 exclamation point. YM. 1 exclamation point. Okay, YM. That is you. And then that's the ES. So we shall take the ES. We'll do it like this because we'll put them in separate charts. So in separate charts, we can put the B adjust on and it'll adjust for the contract costs, new contract costs over time. Y'all bear with me. Bear with me. Bear with me. This don't work as well when it's 3 separate windows because it's got all that dark stuff around it. How can I get rid of that dark stuff? Okay, it kind of disappeared there. All right. Okay. Now that I done took a year doing that, now let's look at the 3 sisters. Put them all on monthly charts. Put them all on monthly. I'm so used to they being inside the same thing. So when I changed one, it usually changes up, and I got the wrong ticker in there. I need the continuous NQ 1 exclamation point. NQ 1 exclamation point. There you go. All right. Now that I did all of that, we are comparing the 3 sisters. So looking at the 3 sisters. This is horrible. I would have been clicked off this video by now if I was you. Now, what are we looking at here? These are monthly charts for the 3 sisters. And the first thing I am noticing, right, is that we have some form of divergence here. So January there from this is January 2022 to January 2022 to January 2024 right there. And on the NQ, this is October 2021, but that's the closest relative high, right? If you go to January's there, so that's the closest relative high, right, to now. And then if we go to the ES, this is January 2022. Yes, January 2022 has the highest high, right? So the ES still has not made a new high, still has not taken out that very, very high. It finally caught up and took out the March high because we were looking at the bearish divergence when we were here, right? Looking at the bearish divergence when we was there. We're gonna go to December because we all broke up there. But look at the divergence there. We were looking at that from relative, right? So we was looking at the divergence there back then, right? And we were struggling to get that. We started showing bearish divergence in December. Right? In December, we started showing bearish divergence. And then now in January, the ES has taken out that March high, the beginning of the year high. It's March for the NQ, and it's March. Yes. Actually, it's April for the YM, but relatively close, right? So that time frame high. So now in January, the ES finally played catch up and took out that high that we were looking at with the bearish divergence. Now, since then, in January, the NQ and the Dow has taken out another high. They have made all-time highs on the Dow and the NQ, right? We are still seeing bearish divergence because the ES futures have not made an all-time new high, but the S&P itself, the S&P and the Spiggity, aka Spirleen, where you at, baby? How? Spirleen has made all-time new highs, right? If you look at the monthly here, Spirleen has made all-time new highs, but the ES futures have not made all-time new highs. And the NQ futures and the Dow futures have. That is called bearish divergence. We are seeing bearish divergence. When you start to see bearish divergence, it's a possibility that a reversal can be on the way. We are coming into a seasonality of maybe getting a pullback. We are very overdue for a pullback on all three indices. And a pullback would be healthy. So this is a precursor to a pullback maybe near. I'm not saying go out there and get to trying to sell everything, buy puts and all that. Wait till price show you what it want to do. Speaking of buying puts, I started looking at dumb money today. I haven't finished it. I was going to finish it, but I got busy. So, um, all right, we're seeing bearish divergence between the three sisters. Still seeing bearish divergence. Um, Now let's go into the ES, since that's been the bread and butter forever, and see what we have done. Matter of fact, I don't want to look at this one day. This making it look like February got a huge monthly candle. That's just been one day. It's one day we went up, um, largely between what now is getting into 2 days now. But from the close of January and what we did today and what we did in the aftermarket, the ES is 1.77% up from the January close. Right. So yesterday, which is today, and today, which is today, because the future started at 6 p.m., we're up 1.7%. But what I'm gonna do, I'm gonna whack off that little candle right there, so that it's not in the way of what we want to do. Now, again, we finally made it to that high, that March high that we have been watching. We were struggling to get. We finally made it there. Pushed up, did not get the January high. Like we said, the NQ and the YM got, and then we rejected off. After today, we know that I said I was going to move that. We know that today or after hours, maybe. Yeah, I think it was after hours. We took out the January high, so we have attacked the high, last month's high already. So that is lending to the bearish divergence. But Tim, what do you mean that's lending to the bearish divergence? If you are bearish, you want to see an expansion upwards first. You want the candle. Let's go to class real quick. Let's go to class real quick. Let's go to class real quick. I ain't been on in a long time, and I feel like going to class. Okay. For my note takers. Right? For my note takers. Ah, where did it go? Did it disappear? All right. Did they change something? It used to be like a box there. Where did the box go? Did they change something? When I ain't gonna say you, the draw is bearish. I'm just gonna say draw, and I'll just say bias here. I'll just say bias. That's easier. Everybody understand that when the bias is bearish, it's kind of funny not having a little box. I'm so used to the box. You want to see price open do this right here. When the bias is bearish, You want to see price open, then expand upwards. Right? Want to see it expand upwards. 2. You want to see it reject off a premium in the sense of above price PD array. I'm just gonna put PDA, and it's not public displays of affection. That's PDAs. That's short for PD arrays, right? You want to see it reject off of a PD array that's above price, right? You want to see it reject off, and when it reject off, once it rejects off of that, it's gonna make. You want to see it make a swing high. You want to see it make us. You want to see a swing high formed. Well, when we just gonna talk about the candle. Yeah, you want to see it reject off the PD array. Then you want to see, because we just talk about the candle itself. No, we ain't talking about a span of time. We talk about a candle itself. You want to see price drop and create a low below the opening price. Then you want to see the candle close at or near the low. Right. And then when you're bullish, this is so freaky to me. I'm so used to seeing the box. That box right there. That's what I'm talking about. When the bias is bullish. I didn't even know you can type without that box being open. That's my first time seeing that. Did they change something? You want to see price open and expand down. Expand down. We'll say downward since we said upward. Right? Downwards. Is that a word? You want to see it reject off of a discount, meaning a PD array below price, not just in the discount of the range, just a PD array below price. Below price. And you want price to rally. You want it to rally and create a high above opening price. Then you want the candle to close at or near the high. Okay. Okay, so now, and then I said, this is I can't remember the exact terminology I said, but I said these 2 days that we've opened up at the beginning of this month, we're looking at monthly candles. We have pushed up, right, all day for the first trading, and now the second trading has begun, and we have taken out the January high. That's a premium PD rate, right? This January 2022 high, that's a premium PD rate. What PD array is that? That is a high, right? You have a high here, you have a high there. You know what I'm saying? Prior highs, old highs are PD arrays. So when price opens, right? We opened. I got the wrong two. We opened. Okay. Fatten this up so y'all can see it. Make it black. Right? We opened. Then we went up. Right? We went up. Now, let's say we come up here to this high, or we come up here to this high. We don't know the future, and we reject off of it, right? So we went up after opening, and let's just say we reject off of it, and then we come down, right? And we hit. We're just going to use, matter of fact, let's do this right here. Let's do this right here. We're going to come over here, go to the open price. All right, that's our open price right there. Matched it up. Now we pushed up, took out that high, right? Let's just say we stopped there. Oh, let's not say we stopped there. Let's say we came all the way up here and took out that high, right? Came up there and took out that high, because that's the high that the NQ and the YM took out, right? But the ES is struggling to get there. But let's just say it finally gets there in reverse. Well, we're not even gonna say that. We're just gonna come here. We took out this high, and we never take that. So we're gonna continue with the bearish divergence. We're continuing with the bearish divergence, and then we start to go down, right? We reject off of this premium PD array, and we start to go down, right? We're gonna come down here to this imbalance right here. We're gonna come down there to consequent encroachment of that imbalance right there. And then we're gonna say we're gonna bounce off of it and close near the low, right? So in the scope of candle, in the scope of a candle, that would give us this as a candle. That would give us that as a candle. All right, because we opened, we went up, we rejected, we came down, and then we closed at or near the low. That would give us a monthly candle that looked like that right there. And that would lend to the bearish divergence that we're seeing. So that's why I say when we open and we start to go up, I said that is, that's going hand in hand. I can't remember exactly what I said. That's going hand in hand with the bearish divergence that we're seeing. Opening up and opening and then pushing up first. That because the way you make a candle with a wick on the top or bottom, at some point in time, price had to go there during that time frame. And we're looking at a monthly chart right now. So at some point during the month of January, we opened, and at some point we came all the way down here. So it was a huge red candle at some point in time. And then at some point we went all the way up here. So it was a huge green candle with a really long wick at the bottom. And then at some point we came back down and we closed right there. So now we are a thumpy little green candle with a long wick on the top and a long wick on the bottom. That's how that candle was created. For those who don't understand how candles are created, those who do understand, I jalapas for wasting your time. And just for completeness sake, we're gonna grab all of this and we're gonna change this to green. Just for completeness sake. Oh, I'll grab the box too. Now, for anyone who would like this pictorial, there is a link in the chat right there. Feel free to download it and have it for yourself, for your studies. If you don't oh, wait a minute. Before I do that, I'm going to relink it. I'm going to do this first. Right? I'm going to do this first. Do this first. Now, copy link. Now, that's the link right there. And since I ain't got nothing else to do, I will drop it in the Discordia for anybody that wants it. Main chat. There you go. Drop it in the Discordia for anybody that wants it. Okay. Now that I spent a whole lot of time on that, now that I spent a whole lot of time on that, now let's get back to update the chart. So that's what price has done on the monthly candle. I see that we have left a monthly fair value gap behind, right? The December 2023 candle is a monthly fair value gap right there. What you want to be doing for any time frame that you're looking at, you want to see what PD arrays were left behind, no matter if price is going up or if price is going down. Since price has been going up, we want to look to see what PD arrays are left behind. We know we left a monthly fair value gap busy in November. Right now we have one in December. Right? How do we know when it's created? When that it's a 3 candle pattern where candles 1 and candle 3, 1, 2, 3 don't share price. Once that third candle closes, then you can look to see if the low of the third candle and the high of the first candle, do they overlap? Do they share price? If they don't, the space in between the low of candle 3 and the high of candle 1 is a bullish fair value gap. It's a bullish imbalance. It's a buy side imbalance, sell side inefficiency, to be more correct, because every buy side imbalance and sell side inefficiency is not a fair value gap, but it is an imbalance. Right? What's the difference, Tim? Go watch the ICT videos and find out, or look back through some of our old content. Okay, so we have created a busy with the December candle on the close of January. Right, let's go down to the weekly. Okay, as of now, the only thing above price is this high from January 2023. Right, I'm gonna go box top monthly, and then I'm gonna say January 2023 high. That's the only PD array that's above price right now. Make this a little bigger so y'all can see this. Right. Then I'm gonna scooch this over. Right. That's the only PD array above price right now. The first imbalance below price is you see how there's a space in between here? I'm ignoring that right now. Why am I ignoring that? I just said it. This candle on the monthly has not closed. So this is not a fair value gap. This is not an imbalance yet on the monthly, because we still have to wait to see how this monthly candle closes. This monthly candle can just come back down and cover that up, and it won't be a fair value gap. It won't be an imbalance. It won't be a busy, right? So we know we got a busy here. That's 22. What you say? Yeah, 2022 high. I'm sorry. right? The 2022 high. If I said 2023, I'm sorry. This is the January 2022 high. It's the QQQ. That's 22. January 2022 high is the only premium PD array, meaning PD array that's above price. Okay. Um, we have an imbalance here. We have a mitigation block right next to the imbalance. For those who don't know what a mitigation block is, a mitigation block, actually, that's a breaker. I'm sorry. I stand corrected. We have a breaker right here because we got this low from May 2023 came up, made a high in July 2023, came down, made a low in October 2023, and then we came up, got a break in market structure right there, right? Creating a breaker. As you see, the January candle traded back down into that breaker, right? And pushed up. So we did trade back to the breaker once already. This is the first touch, and we are pushing back up. Right. So looking at what price has done, prices came up, got a break in market structure, pulled back to a breaker, and we went back up. So since price came from all the way down here at this order block right there, right? This is just, we're reading price now. Well, we're analyzing price. I'm sorry. Price came down, right? Came down, took out sell side here, came down. We took out sell side here, came into a discount PD array right there, imbalance, right? Engineered liquidity, took off institutional sponsorship, right? This institutional sponsorship, this BISI, this order block, this breaker, all of their job is to support the implied move. What is the implied move? Go attack the buy side liquidity. For this price run right here, where's the buy side liquidity? At this January 2022 high. That's the buy side liquidity for this entire move right here. All right. So healthy price action would be for the ES to take out that high like her sisters did. Her sisters already took out that high. Remember when we looked at that? When we looked at that, NQ took it out. YM took it out. So the sixth sister catching up and taking out that high would be healthy price action. All right. That would be healthy price action to go up there and take out that high. Why? Because this institutional sponsorship implies that we want to attack that high right there. Right. We came up, had a break in market structure, traded back down into the discount PD arrays, hit an order block, hit a breaker, expanded up with displacement. Right. We expanded up with displacement, pulled back into what? Another breaker. And we started pushing up. So we traded back into this breaker. This breaker, healthy price action, will push us up into those highs. Right. Will push us up into those highs. And then we can see if we get us a reversal signal. That's the monthly look of what price has done on a monthly time frame. Let's go down to a weekly, shall we? With the weekly, we're not going to go that far back. We just went that far back because it was the monthly, and the monthly, needs a little more running room to get a good view of what it's done. So on the weekly, you see here on the weekly, notice that we came up. Again, it's same thing. We came back into a weekly breaker, right? And now we're expanding up. The implied move is where? The buy side liquidity there. You can see a lot more price action on the weekly. You can see a lot more goings ons, right? You can see a whole lot more goings ons. And you can see when we came back down here, right? All of this retail support there. You see all this retail support that we traded back into, right? In actuality, we just coming back into this breaker right there, breaker 19, coming back into the breaker and pushing back up. But at the same time, with the ideas of just classic retail support at a time like this, when it aligns with the narrative and the PD arrays, this is when the retail support works in your favor. And now the reason behind it working for your favor, because we came down. Remember, we came back down into the discount on the monthly, came down to the monthly PD arrays, right? This was the bullish retracement that we were talking about. Remember, we was talking from from July into October. We was talking about the market was in a bullish retracement, meaning it just was pulling back. It was bearish at the time. Then we got down there and then we started to take off, right? We took off, came up here, had another breaking structure there, right? Traded back into that breaker. Got all this down here acting as a balanced price range. Traded back down into the breaker, back down into the weekly BISI. Then price took off again with displacement. On the weekly, it's showing displacement. Tim, what do you mean it's showing displacement? All right, we came here, traded back into the fair value gap, but we kind of dilly-dallied in there for a few weeks, right? Then we expanded with the imbalance. That's displacement, right? Here is your fair value gap. And then this week, this week we opened up, came down, went back above the opening price. And then tomorrow, if we close here or above there, if we close here or above there, then there is what we talked about played out for this week. You had it open, you went down, made a low, rejected off of a discount PD array, went back up above price, right? Right now we've made a high. So we can just close at or near the high. We close off the high. We can close up there. Then that will give you your bullish week based off of what we just said. If you're bullish, you want price to open, you want price to go down, then you want price to go up, rally, then you want price to, close at or near the high. There it is right there on the weekly candle playing out. They call that the power of three: accumulation, manipulation, distribution. Yes, accumulation, manipulation, distribution. You accumulate, you manipulate, then you go up and distribute. Or you accumulate, you manipulate, then you go down and distribute. And the distribution is usually what pulls it off of the high or bounces it off the low. Okay, so we traded back into the weekly fair value gap. The BISI was from the week of 16 January, traded back into it, and we pushed up, taking out last week's high, and we got one more trading day in this week left. So we'll see how we close. Yeah, that's pretty much it on the weekly. I'm going to mark it. Nah, I'm going to leave it there because this week ain't closed yet. So I'm just going to leave it at the the actual high of the fair value gap. We did touch down into it with an institutional order flow entry drill. Yeah, that's pretty much it on the weekly. Let's go to the daily. Oh, what an interesting month it's been. This is the beginning of the month right here. Right there. All right. That's the first. Y'all can't see that. Okay. So that's the first trading day of January. And this is the last trading day of January. As you see, with the 1st of February, we came up and we took out the January high all in one day. We had a 1.79% day, right? And from peak to trough, we did a 1.87% day from the highest high to the lowest low. And a nice chunk of that came after 4 o'clock. So we started out the month, retraced back down into a daily fair value gap, back into a daily breaker. Starting to see a little theme there. Remember, we traded back into the monthly breaker. We traded back into the weekly breaker. We traded back into the daily breaker. We traded back into the daily fair value gap. We traded back into the weekly fair value gap. I can't remember about the monthly. I don't know. But you see the prices fractal theme going on. You see the prices fractal theme going on. Yeah, we cooking tonight. Let him cook. We cooking tonight. So is that why ES looked so clean on the lower time frame? Is why it looks so clean on the lower time frame? A lot of things will make one, like today, the NQ didn't look as clean as the ES. A lot of things will make it look like that, and that's got a lot to do with like when you're trading during divergence, it'll be more chop in one of the sisters than the other. There's no real rhyme or reason behind which one is the cleanest. You just, if you trade more than one, you just go trade in the one that's the cleanest. Just like the people who trade Forex, they look at multiple pairs and they just trade in the pair that's the cleanest. Meaning that it need to play catch up. The six sister theory, it could be the six sister theory playing out where it's got a cleaner expansion to the upside. That could be a part of it, but like I say, there's no hard and fast rule to why one is going to look cleaner than the other. You can have a million theories about it, but just keep it simple and say, hey, the ES not trading clean today, I'm not going to trade it. The NQ not trading clean today, I'm not going to trade it. It is trading good, I'm going to trade it. It's like, just look at it like that. It don't this it's so many concepts and things like that. You'll end up in a rabbit hole. Y'all remember his name wasn't Peter. What did I say his name was? I can't remember what I said his name was. I can't remember what I said his name was. Man. Well, anyway, his name gonna be Bartholomew. That's what we calling him. That his name is gonna be Bartholomew now. I gave him a name before, but I can't remember. His name gonna be Bartholomew. You'll end up in a rabbit hole. Okay, so we pulled back into the daily breaker, the daily fair value gap. We pulled back into all of that. Then we Kind of stayed in that range up until the 18th. So whoa. So from the first trading day, which was the second, up until the 5th, we pulled back, took out the sell side, traded into the fair value gap, traded into the breaker that we spoke about. We pushed up, um, kissed the buy side there, did not take it, pulled back into a small daily fair value gap there. This Bissy right here on the 8th. Nice little tight little range there. We know the market was not doing a whole lot, right? And then the second half of the month has been just a slow expansion to the upside. It's been pretty much all up, right? On the second half of the month. From the 18th up until the 30th, price just crept up each day. If we look here, we can see, except for the 25th, January 25th, except for January 25th, every other day made a higher daily high. See that slow creep up. 18th made a higher high than the 16th. The 19th made a higher high. The 22nd higher high. 23rd higher high. 24th higher high. The 25th didn't make a higher high. 26th higher high. 27th higher high. 28th. I mean, the 3rd, 27th, 29th, 26th, 29th, and the 30th higher high. Every day except for the 25th from the 18th, we made a higher daily high. And then on the 31st, we pulled all the way back down and kissed this daily fair value. Did we get into it? Yes, we did. Institutional order flow entry drill on the daily right there. Y'all see the theme we got going on there? Y'all see the theme we got going on there? Because that was a weekly fair value gap, right? That was a weekly fair value gap right there that we pulled back into, right? Then we look at the daily. It's a daily fair value gap that we pulled back into also with what? Institutional order flow entry drill. And then we expanded up and we took out the weekly and monthly high on this candle right here. Right? Came up, took out the weekly and the monthly high. Right there. Does price have to get up there to that January 2022 high? It don't have to. It would be nice if it shot up there and got it. It would be healthy price action to shoot up there and get it before we go. But if it fails to get there, that would lean into what was the catchphrase we learned? Bearish divergence. Dun, 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 dun. All right. And that's the daily, man. That's the review of January. That's the January review. So now let's do a quick chart update and then I'll leave that weekly fair value gap there. Yeah, I'll leave that weekly fair value gap there. Don't really need that monthly there. Is super far away from price. So I'll put the weekly fair value gap there. Bullish fair value gap. The weekly and lower. Again, we've taken out last week's high, so no need to mark that. The only other high above price is that January 2022. Yes, that January 2022 high is the only high above price. On the weekly, for the daily, we have a we pushed through this volume imbalance today. We took out a couple of days highs, so only high of interest to me. Oh, let's look at this right here. Looky, looky, who stole the cookie? If we look all the way back over here, we have a very, very, very old Sibby that's lurking. And if you're wondering why I'm anchoring it to this high instead of that high, it's because we traded back up into the Sibby offering buy side delivery, because this Sibby, it was one fell swoop down. So it left a sell side imbalance, buy side inefficiency in the market. And then on this February 1st, January 10th, these days kind of funky. Oh, that's January 7th. Where did I get February 1st from? Oh, it's a Friday one. So this January 7th, January 10th, January 11th, January 12th. On the 12th, we came back into that Sibby offering buy side delivery up to this point, and we left. Now, this is the first time we're coming back to the Sibby, and this is the only piece of imbalance that's left, because the buy side has been offered up into the price of 49.60.50. So up into 49.85.50, that's the only buy side inefficiency that's left in price. So above price, we just tapped into that buy side inefficiency, and we still have a little bit more up to 49.85.50. So we have a daily imbalance that's above price, and then we have the old highs. Those are the premium daily PD arrays, meaning PD arrays that's above price. A BISI that we just touched with the price action on the 1st of February, and then the old high from January 2022. All right. And that's it for the daily. That's all I'm gonna mark for the daily. I guess I'll mark out, I'm tripping, the high and the low from yesterday's trading. Box top daily, box bottom daily. It's a huge box today. Box bottom daily. There you go. So current and below, current and below, current and below. All right. We'll peek at the 4 hour and then we'll call it. We'll peek at the 4 hour and we'll call it. On the 4 hour, came down, touched into that fair value gap back on the 31st, and then expanded up, inverted this Sibby right here. Price just kept going, never came back to it on the 4 hour. Price just kept going, and then we expanded up with some authority on that 2 p.m. 4 hour candle today, and took out the buy side trading, tapping into the piece of the Sibby that's above price. In the wake, we left two BISIs. We got two BISIs left in the wake. So we got a huge imbalance. We got a huge buy side imbalance um, left behind. Right. I'm not going to mark these two bissies out. We inverted another SIBI over here, right there, with this balanced price range. We cut through it. Oh, speaking of balanced price ranges, let's talk about it. Let's talk about it. See how we consolidated there? Offer, sell side, and buy side. Left it. And that's a balanced price range. All right. Let's clear all this stuff off real quick, and then we're gonna cover this, and then we're gonna call it. That's gonna be wraps. That's gonna be donezo, because we done been on here for an hour. Sorry for keeping y'all so long. So all right. Balanced price range. Right. BP ADA. Right. Balanced price range. Offer, sell side, buy side, then left it. Balanced price range, right? Then traded back down into the inefficiency at that balanced price range right there. Right. Last up, traded down to the inefficiency in that balanced price range. And while doing that, we are buy side, sell side, buy side, sell side, buy side, sell side. Then we left it. Right. What does that give us? Balanced price range right here. Right. Balanced price range. We left it. So then we consolidated, and then we puked. And price cut through these balanced price ranges. And there's another little balanced price range right there. Those opposing fair value gaps. Right. On the way down, price created a balanced price range on the way back down. Right. Opposing fair value gaps. Look what it did. Went back to that balanced price range, used it as resistance, and continued to slice through these right here like hot butter. Hot, just melted through it. Took the time to come back and rebalance this 4-hour SIBI right here. Went back in, repriced it, and then left it. So you got a rebalancing of that. We repriced it and then left it. Offered the buy side, then got up out of there. Right now, came here, sell side, buy side, sell side, buy side, sell side, buy side. And since you got all this up move and then all this down move, all of this, including all these balanced price ranges, what's the direction? We're pretty much going up, offering what? Buy side delivery. And then we got a steep sell side delivery, right? And then what did price do? Right? So that yields all of this as a balanced price range. Then what did price do? Bang! Cut through it like butter. Cut through it like butter. Why? Because the sentiment was bullish, and we came down and took out sell stops below all of this balanced price range, cut through it like butter, took out the sell stops, Pang! When it took out the buy stops. And with that, I yield my time. What's up, Rhonda? Does anyone have anything for me? I'm hungry as a hostage. I ain't gonna hold you. I am hungry as a hostage. Hey, I don't see nothing in the chat. Don't see anything in the chat. I don't see anything in the chat. So I'm assuming all hearts and minds are clear. Hopefully I was able to help someone with the things that I shared today. Hopefully I was able to help. So I'm just cleaning up some lines on my chart. Y'all know how I be wanting my highs to be on the most recent candle on the lower time frames. So I'll be going all the way down to the 1 minute and making sure I put my high on the most recent candle on the 1 minute. And look like we opened. Yeah, we did. Man, we opened up and barely ticked down on yesterday. And then today we got a crazy gap down, look like it. Yes, we did. Look at that, y'all. We got a crazy gap down. Look at that gap down on the ES. Crazy gap down. Closed there. Then opened up all the way down there. Crazy gap down. Bearish new day opening gap. Man. Closed at 49.59 and opened up at 49.52.75. So that's what? 6 points. 6-point gap down. Pretty much, give or take. All right, man. That's it. Till next time I decide to jump on app. So if ES never takes out that high, then we can assume the quarterly shift has happened. Again, the quarterly shift happens over like 3 to 4 months. The quarterly shift happens over 3 to 4 months. Now, with that being said, if the ES does not take out that high, now let's go to a weekly chart. Right? If the ES does not take out that high on a weekly chart, right? On a weekly chart, if the ES does not take out that high as we stand right now, right? As we stand right now, what do I mean? As of now, this is the bullish order block that's in the most recent price leg. This is the low of the most recent price leg, right? As of right now, today, on the ES, if it take out that high or not, right? The bearish divergence is hinting at a retracement hinting at a pullback, right? So for the ES, the quarterly shift happens over 3 to 4 months, right? For the ES, when we trade down past the opening price, when we trade down past, not opening price, when we trade down past this closing price there, right? When we trade down past that closing price there, coming back down, that's going to be the change in the state of delivery. As it is right now, if we get another down close week over here, right? Once we trade down past that one, That would be the change in the state of delivery, right? As of now, this is the swing low in the most recent price leg. That would be a bearish break in market structure on the weekly, right? Now, and all of that is confluence towards price pulling back in conjunction with the bearish divergence in anticipation of the quarterly shift. The quarterly shift happens over, it's like a quarterly. So every quarter, you know what I'm saying, you look for a shift. Is it going to change? We've been bullish over the fourth quarter. We was bullish. So now we're coming into the first quarter. Are we going to shift to bearish? Right? And then once we shift to bearish, then it plays out over, you know what I'm saying, 3 to 4 months. You know, it takes like 3 to 4 months for it to play out. Looking at a daily, right? Looking at a daily. We've come up and we've taken out this high, right? We got an imbalance up here. Healthy price action would at least finish repricing this daily fair value gap, right? Would love to see that happen. Would love to see it poke up into the high, but it don't have to, right? As of now, going below that low right there, right? Going below that swing low right there. There's our change in the state of delivery here. There's our breaking market structure on the daily, right? Breaking market structure on the daily. Mind you now, the lower the time frame, you know, because remember the weekly, let's go back to the weekly. I'm going to do this right here. As of now, bearish MS week. As of now. We're no, come back here. Right there. That was the change in state of delivery for going up on that bearish candle right there. That was the change in the state of delivery for going up right there. Correction on that. Forget everything I said before, right? Because I'm like, it's the opening price. So the opening price on that right there, once we went back above, that was our change in the state of delivery for going up right there. Now, coming down, that's our breaking market structure right there. And then for the change in the state of delivery for coming down on the weekly, right? We would need a bearish order block over here, right? Once we get a bearish order block over there, that will give us our change the state of delivery. So let's just say this candle right here. Let's say that candle right there is coming up, right? Let's just say we come and we displace down. We displace down here, right? That opening price right there would be your change in state of delivery as of now. If we, you know, how we trade in here, because we came up, right? And then this right here would be the last up close candle after coming up very close to this anticipatory reactionary point, right? if price was to displace back down right now and made this a bearish order block, that price right there would be your change of state of delivery on the weekly. That's why I was thinking for a second. I'm like, it's the opening price. It's the opening price. So that price was the change of state of delivery going up, and this would be on the way down if it, creates the order block right there. All right. So I'm not gonna put that there because that's not real just yet. And then let's go to the daily. Okay. So going to the daily, this was the weekly breaking market structure down here. All right. That was the weekly breaking market structure down there. This right here would be, as of now, this right here would be a daily breaking market structure, right? As of now, because of what price has done, right? That would be a daily breaking market structure. Okay. And if we get displacement down, right? If we get displacement down, creating a bearish order block here, this right there, that opening price of that candle would be your daily change in state of delivery. Change. I don't know. Change in delivery. CID, just like the people that lock you up, investigate you in the military. Okay. All right. So if we displace down, making this a bearish order block, that will be your change in the state of delivery right there. That would be your daily breaking market structure. Right. Bearing in mind that this is the weekly breaking market structure down here. And we have daily imbalances. Let's go back to the weekly. We got a weekly fair value gap that's below price. So, and I stopped at that candle there, but I'll just go to the full weekly, right? And you always want to keep in mind what the higher time frame is doing as you drop down. What just happened? I don't know what just happened. So, right. So when we start coming back down, if we come back down, the daily will encounter a weekly. It already touched the weekly fair value gap and pushed back up, right? And we took out the high. Then it can come back down. You got a weekly imbalance that's still there, right? It's designed to support price, right? And you want to see how price closes on a weekly basis in relation to this fair value gap, that imbalance. You want to see how price on a daily basis closes in relation to both of these imbalances right here, that 118 BSC and that 119 BSC. Want to see how price closes in relation to that. If we displace down, make that an order block, that's changing state of delivery. That's your break in market structure, right? Then you come back down, you can have another break in market structure right here on the way to the weekly break in market structure. All right. On the way to the weekly break in market structure. Then by that time, you'll probably have a weekly change in state of delivery on the way to that weekly break in market structure. And then once you get all of that on the daily, if you're uber bearish, once you get your change in state of delivery here, right, you can start looking, you know what I'm saying, you get your change state of delivery, you get your break in market structure there, you can start looking for short setups. What would that look like? Displacement down, leaving imbalances behind, retracing back to an imbalance, a bearish breaker, You know what I'm saying? If you displace down, you'll have a breaker there, you have a breaker there, right? If heavy displacement will leave, if you get a fair value gap opposing this one, that would yield all of this up here, a balanced price range, because you got ups, buy side delivery, sell side delivery, then you would have opposing fair value gaps. All of that would be a balanced price range. Got a balanced price range over here, displaced down past that, that make that breaker very high probability. That make that right here, that's a mitigation block, but that make that breaker very high probability. You know, all of this area, that'll make that a high probability area to be looking for some type of short off of right here if we displace down. Do we see we still have to wait for the breaking market structure to the downside? You don't have to wait for a breaking market structure. You can formulate stuff off the change in state of delivery. Breaking market structure is just more confluence, just like how you have the shift in sentiment and then you have the breaking market structure, right? You can start formulating ideas off of a change in state of delivery, right? It's just all a part of how soon you want to get in. Are you able to show the balanced price range? What do you mean? Talk about when I drew them boxes? Talk about when I drew out the boxes and stuff like that? If you talk about when I drew out them boxes, you're going to have to rewind. You're going to have to rewind. I can't remember what time frame I was on when I did that. But just look at the sell side and buy side delivery, right? You look at sell side and buy side delivery and then leaving it like right here. That's a balanced price range there. We got sell side and buy side delivery, then we left it. So boom, that's a balanced price range there. We got all this sell side delivery. Then we got all this buy side delivery, right? So all of this right here, all of that there. You got so many different ways you can look at like balanced price ranges. Boom. All that's balanced price range. And what did price do, right? When we left that area, got above that high, left it, traded back down into the imbalance, down into the breaker, right at the top of the balanced price range. And then we went up again. But the balanced price range is as simple as offering buy side delivery and sell side delivery. For every red, you got a green. For every green, you got a red, right? You offer sell side delivery and buy side delivery. It ain't got nothing to do with liquidity. It ain't got none of it. It's just offering price to the sell side and offering price to the buy side. And once you get that and then you leave that area, that's the algorithm saying, I'm done with that. How am I going to use it? Well, it depends on the bias. If you're bearish and you're above the balanced price range, it says, I'm done with that. I'm going to cut through it like butter. If you're bullish and you're above the price range, it says I'm done with that. I'm going to use it as support. And vice versa. If you're bearish and you're below, it's going to use it as resistance. If you're bearish and you're below, no, if you're bearish and you're below, it's going to use it as resistance. And if you bearish and below, I don't know, bullish and below, it's going to cut through it like butter. There you go. There you go. Get your thoughts together, Tim. Yeah, I erased all of that. I be deleting stuff quick. I be deleting stuff quick. That's gonna be it, man. It's 11 o'clock. We've been on here for an hour and a half, and I'm hungry as a hostage. Starting to get tired. Does anybody else start itching when they get tired? And when I start scratch. I be like, you be having that sleepy scratch. You be just start itching, be like having that little sleepy scratch. You welcome. You welcome. Be getting that little sleepy scratch. Ugh. Y'all like my new background, man? Hey, I be going crazy on the Photoshop. Y'all don't see the little spy on Spotted. Y'all don't see the little spy put on Spotted back right there. Y'all don't see the little spy put on there. You know what I'm saying? Y'all don't see the candles. Y'all don't see the candles. Y'all don't see the candles fading off into the sunset. Y'all don't see the candles fading off over there where the bull and the bear fighting. Here it is. The candles start over here, and then they go over there to where the bull and the bear fighting. Then Spidey. These the pictures that I used to do that. Some pictures I got off Al Gore's internet. That picture right there. All right. That picture right there. Not that one. Then that picture right there. And that picture right there. There you go. Those three pictures right there. Those are the pictures that I used to do that. But yeah, those are the three pictures right there that I use to create the Aranya Grande. Yep. So you say itching and tired. Itching and tired. You don't be when you get sleepy. I know y'all do, cause I done seen so many people they be sitting there scratching. That's that sleep scratch, man. Everybody do that sleep scratch. E-Rock say she loved the sleep scratch. No, I'm just playing. I love it. No, I'm just playing. I know you talk about the picture. Anyway, man, I appreciate y'all for hanging out, man. Y'all know I ain't got nothing to do. My sweetie, she out of town working. So I'm just on here running my mouth, man. About to get up out of here, though. As always, man, until the next time I decide to get on Al Gore's internet and share my thoughts. Come on, Tim, grab the right thing. There you go. Until the next time I decide to get on Al Gore's internet and share my thoughts, man. It's your boy, Aranya. Where is it? I got to get used to where it's at. Aranya Grande, a.k.a. Big Spider. Y'all be safe out here in these trading streets, man. Gone.